Okay, and we are live. How's it going, Tom?
Yes, good, thanks, mate. You?
Yeah, I'm doing really well, thanks. Crazy market we are in. Single most important word here is escalation, isn't it?
I think so. I think so. I think what the speech Trump gave yesterday, I think, was more to reassure the American public that things might escalate before they de-escalate. He didn't put any timelines on it in terms of when they're gonna look to be done. He just said very soon. But they've been saying that all things are going well. They're speaking. We should be out very soon. We've not got much longer to go, but there's no actual time deadlines, and every time it's 2 to 3 weeks, 2 to 4 weeks, or even 4 to 6 weeks, it just keeps sort of getting extended, or it's sort of always going to be 2 to 3 weeks, 2 to 3 weeks. And Trump's wording is very different to his actions. The actions are that there's a significant military presence being built up in the region, and it continues to be built up. It's not something that's decreasing, or their replacements are going in. It's not replacements, it's additions. So I think, and it's all what I put in the report today. I think that there's two options here for Trump. It's pull out, declare victory, and the world goes to a worse place than it was before. Maybe not on the nukes front from the Iranians front, but the Strait of Hormuz will be being policed by the Iranians, charging $2 million per tanker. Oil will remain high. Price will remain high. The region will be unsettled and be basically in the control of the Iranians, which is not the regime you probably want in charge of an entire region. I don't think Trump can leave like that. I think that it would be a disaster if Trump did leave like that, because it just means higher oil prices for longer, weaker economic growth, etc. I don't think he can do that.
Yeah, no, it's very interesting.
So I think the other option is he has to go in and open the strait, and I think he has to use some sort of force, use troops, take some of the a key island in the strait. But there's doubts over whether he can actually do that. There's also been plans drawn up for troops to go in and seize the enriched uranium. I mean, that sounds mission impossible, but if they can do that, then brilliant. But I'd be very surprised if they were able to do that. Like Maduro, go in, take Maduro, and leave without any sort of casualties. I can't see that being the case. So I think we got a small rally today with potentially a deal being worked out between the Omanis and the Iranians to police the strait, but I don't think that's gonna be positive.
Yeah, no, I agree with you. For the most part, I would push back a little bit. In your market update, you said, there's two kind of options where this goes, as you just said. Yep. He declares victory, he exits, which would look terrible for him. And then, of course, he goes in, he escalates, and war kicks off. And you specifically said it goes in, escalates, and he wins. But I think there are two other possibilities on the table. One, he decides to escalate, but he loses, in a sense, and different ways to look at that. But also the possibility, and I think it's the most unlikely, that he exits, declares victory, but manages to secure a type of economic deal with Iran or some kind of compromise. So what do you make of those two options? De-escalate and figure out a deal, or escalate and actually lose?
I don't think they'll de-escalate and figure out a deal, because I think both are so far. I think both sides are just so far apart on reaching an agreement. So I don't think something like this can happen. The other possibility of him escalating and losing, I think that's more likely than the other scenario we just played out there. I'd be surprised if that happened. I mean, if this is to escalate significantly, then I think it's much more drawn out. It's not several weeks, but it'll be several months at a minimum. It's very possible, because the Iranian military are relatively strong, but I think they are getting their launchers taken out, their missile sites being taken out, production sites being taken out. So I would assume it would just be like a matter of time, even if it is a long period of time. But
Yeah.
I think they can escalate and lose. I just think it's more likely if they did escalate, that they win.
Yeah, that makes a lot of sense. I think one of the issues I see is Trump hasn't quite said what victory looks like. Israel has
Yeah,
made very clear, like, look, we're going to wipe you out. Greater Israel plan. Whereas America, 1 minute it's you can't have nukes. The next minute it's you can't have ballistic missiles. The next one is regime change. And then it's you got to open up the strait. Then it's one, we want all your oil. Then it's complete surrender. And they haven't quite got a winning plan. The
framework.
American people, they haven't been told what victory looks like. And if you don't know what victory looks like, you can't win. What do you think victory looks like for the Americans before they decide, you know what, we've won and/or we're backing out for whatever reason?
I don't necessarily think it's down to that. I think it's if Trump starts making forward progression, and he's seeing that those progressions aren't being had, but the efforts are there to make those progressions, which I think he's sort of seen. I think they were hoping for a regime change by now, for the regime to be toppled, and that hasn't happened. So I think it's the case that the Americans will just keep pushing forward with some of these objectives. And if they don't get the outcomes they're desiring, then I think that's sort of the peeling back that they can do, and then saying, that's not gone to plan, but declare it as a victory. They're now declaring it as they basically changed the regime. They're dealing with more like intelligent people, and but it's not. There's more hardliners in place. So in terms of like a victory, I think you can't leave the region with the strait having been open before, and then leave the region declaring victory and the strait being closed. That doesn't make any sense. So I think the strait
Absolutely.
would have to be reopened, and there has to be some sort of deal with regards to stockpiles of missiles and the nuclear program in Iran. They can't get above a
Yeah.
certain amount of missiles. I think the range is like 2,000 kilometers on the missiles. They can't go beyond 2,000 kilometers, and there has to be a deal for the enriched uranium.
Yeah, I actually think it's one of those things, same thing in crypto, when you're looking for a big return and you start off, you're like, I want a 5x, right? And then things start to go wrong, and then your goal actually moves down. You end up at the stage where you're like, I just want to break even. And then you're like, I just don't want to be
Yeah.
down 90%. And I think with this war for the US, it came in, I think there's a lot of hubris. We took out Maduro, we're going to come in, we're going to get rid of the uranium, make them submit. And I think what's going to happen, if I had to say, in my opinion, we're going to get to the stage where the victory for Trump will just come down to the economics. I think things are going to get worse, but then what's going to happen is it's his way to declare success is the straits open, oil's come down, inflation's under control, job market's improving, and he will declare that a victory. I don't think they're at the stage where, you know what, no more uranium or no more ballistic missiles. Maybe for Israel, that's what they want, but I just don't think it's a practical reality for the US in the next couple of months. So I think they're just looking for the economic turnaround.
Yeah, I don't disagree with that, to be honest. I do think they're going to go for it one last time over the next 2 to 3 weeks, to be honest. And then I think it's the case of, if they've made significant progress, then they can maybe go again to a certain degree. But if it hasn't been the case that they've made those efforts and they haven't made the progress, then I think you're right. I think he's already declared victory in some kind of ways, with saying the regime has changed, and it hasn't. It's the exact same regime, just replaced with more hardliners. So I think you're right. Trump will just spin it in a way, and he'll come out when it suits him and the US rather than the Israelis.
Yeah, that should be the case. I also think it's very interesting because what a lot of people may see as the lowest stakes victory being the opening of the strait is
Yeah,
simultaneously the easiest and the hardest because, you know,
yeah,
the Iranians are more likely to say, fine, we'll open up the strait with some sort of deal than they are to say, you know what, we're happy to submit fully. You know, they're very different. But for the states, the number one thing that matters right now in reality is the
straight.
strait. And it's the easiest to do as well if you're the Iranians. It's difficult to really win a war like this. You have to, you know, it's a war of attrition. And they're not really on the offensive, realistically. They're on the defensive when it comes militarily. But it doesn't take much to keep the strait closed at all. It's quite easy,
No,
right? They don't have to have the biggest gun. They've got a gun, in a sense.
no. It's the deterrent. They have to just hit one ship, and the other ships will stop coming through. And it's sort of as simple as that. And even if they say the strait is all clear, it's open for business, I think, and ships are like slowly starting to pass through, but no great numbers, and they're paying to get through, etc. So you know, there's a toll there at the moment. So it's not going to be something that one, even if it is, say it's open tomorrow, for instance, we're open for business, no problem, come through. Ships are still going to be very skeptical. You still have to have those human bodies on those ships going, yeah, no problem, we'll make that journey. We're not too scared or too frightened. So I can't see something like that happening over the next 5 to 7 days, say.
Yeah, absolutely. And all it takes is one. You know, you open the Strait up, everything seems cool,
Exactly.
calm, collected, and then one missile, one ship sinks, and it's downhill from there. So I think
Yeah.
Iran's in a very strong position. Yeah, very interesting. I guess the thing with Trump is all talk, chickens out, and he's very flip floppy. And it's very clear at this stage that, you know, he's just trying to control the markets in a sense. This is what I said. For him, I think victory is opening up the strait. His language does not match his actions. You know, he's saying three
No.
weeks, it's done and dusted. He's sending troops over. From my understanding, it will probably take about 3 weeks for the
Yeah.
troops to get there. So, which you can't think is a 3 week thing, and you're sending troops over. That it's going to take 3 weeks for them to arrive. So, you know, I think a lot of his speech is just full manipulation, and we're in a tricky spot because we have a 4 day weekend, correct? We have Good Friday, we have the weekend, and there's going to
Yeah.
be a lot of talk coming out before market closes to make sure things don't go into the weekend too bad. So, what do you make of this extended weekend, and what do we have to keep an eye out for?
I think that most of the talk has been done. I think Monday through Thursday or till last night, the talk has been done. I think this ramps up, military, strikes, etc., ramps up tonight going into Monday. So, I think the talking part has been done. I think now is I really felt that speech last night was him um trying to keep everyone relaxed. We're here for a purpose. Don't worry, it's all good. We're under control. You would say something like that if you thought, okay, I'm going to do something that's a bit crazy, a bit outlandish in the days that follow it. Let me go out and just do a speech that reassures everyone that it's not too bad. This is to be expected. So I do think we will see an escalation over the weekend. The stock market is closed. And I think Trump likes that he chooses to go and do these missions or escalations when the markets are closed. So I can see something like that happening this weekend, and I think probably the talking part of it is done and happened Monday through Thursday.
Yeah, it's definitely a tricky situation. I think things
Yeah,
started to peak as far as worry, chaos, and fears when he said we're going to blow them back to the Stone Ages. And
yeah,
you know that's a big statement. And he went almost crossed the line when he said he's going to potentially attack the desalination plants, which is something we've been discussing that Iran could do at any moment to the Gulf states.
yeah,
So I don't really know what he could say that's worse than that. To be honest, he would have to actually go and do something.
yeah. I think nothing. I do think I can't remember what city it was in, but a bridge was hit today connecting two of the cities in
Oh
Iran.
no.
So we now have reports out that the Iranians have identified sites, bridges to go and hit in. I think it's I can't remember all the different countries. I think it was Kuwait, Abu Dhabi stood out to me. There was one in Abu Dhabi that they suggested. So it's we're now starting to cross the civilian red line a little bit. Desalination plants is like the furthest thing. That's the one which is like all out war basically. I don't think we're there. I don't think we'll get there. I mean, yeah, it doesn't stop people leaving the countries like Abu Dhabi, Dubai, etc. But it's just all possible. And so I think those desalination plants, I don't think that happens. That's at the far end of the crossing the civilian line. But you're starting to see things like bridges potentially now be hit. That is probably the first step. We've seen steel plants be hit, but again, that's all economical. It's more to do with the economy, try to cripple them financially, etc. And we did see the bridge hit today in Iran, and Iran is now identifying bridges in neighboring countries, states, Kuwait, Bahrain, Abu Dhabi, etc. So I think this can escalate. Sorry, another thing was the Australian and UK prime ministers came out addressing the nations, and they basically said, "Look, we need to." It was sort of batten down the hatches, blah blah blah. I think they know escalation is coming. They know something. Otherwise, why would they come out and give those addresses at that point in time before this 3 to 4 day weekend? So I'd be very surprised if we didn't see it more materially escalate this weekend, to be honest. Of course, can be wrong, and I probably hope to be wrong, but I think looking at the stats and the facts of it, I don't think so.
Yeah, I agree. A personal question is: you're someone who is based in the UAE. You are back in the UK right now. Where are you at mentally? Is it something where you're like, I'm going to go back soon, regardless, because they're not attacking civilians, or is there an element of, look, I'm just not going to risk it? It's quite sunny here anyway. So where are you at when it comes to going back?
So I so over there, Dubai and stuff, you have to pay you obviously know this, like have to pay your rent a year up front and things like this. I renewed like two weeks ago, and now the estate agents I reached out to are now starting to I said, "Oh, their deal was about," but no deal was about. I was like, "Oh, okay, I just renew." So I renewed, and now they're all starting to reach out to me a little bit. So it's obviously getting to the point where it's crunching there. Anyway, I'm at the point. So you come out just in case of the desalination stuff. That starting debris from a missile is not really, or wasn't the bit that scared me. It was just in case you do get a serious escalation and the desalination plants hit. I mean, it'd be phenomenally unlikely, but just in case, it's not worth it. Make a holiday out of it. Come back to London, see friends, etc. In terms of, am I looking to go back? I was looking to go back before, because I thought Trump was winding it. Last week, it seemed to me that he wanted a deal, he wanted a ceasefire, blah, blah, blah. And the Iranians just haven't really played ball with that. So I now think Trump is going to have to escalate. So as of last week, I was thinking, in a week or two, could probably go back. Now you're sitting here saying, probably let's see how this goes in 1 or 2 weeks, with then viewing to go back 1 or 2 weeks after that. So now it's like there's another 4 weeks, probably at least. So what, for someone like me, it's probably still not worth it to go back. You just wait, and as the weather gets, we go around the summer and just try and see a few countries or something, I suppose. But other than that, it's if you're already out, it's probably not worth the risk to leave, especially if you're like us. We do our work remotely, etc. So yeah, I don't see the risk of going back just yet. Let this escalate. I really feel like this escalation is going to happen. So I think let that happen. See how see how the cards fall, and then go from there.
Yeah, no, that makes a lot of sense. I'm in agreement with you. I won't be traveling there anytime soon, but
yeah,
most likely by end of year, I think things will calm down. I am curious, who does an escalation actually benefit? Who wants this to escalate? From my perspective, and it may sound a little conspiratorial, I think it can actually benefit Iran if it escalates. I think it benefits Israel. I think the only loser in an escalation is the states. So why on earth are they the party that seems the most bullish on escalating? I don't see this hurting Iran or Israel if it escalates. I think they want it.
I think it's reputation. I think if the US are seen not to escalate here, Trump is very, very aggressive in his negotiating tone. I mean, he's put out different headlines every day this week. It's sort of I've been trading the headlines. I've been trading the market, and I've actually done all right out of it. But I look back this morning and thought to myself, how on earth, it's been extremely difficult to play it because the headlines are so different each time. But that's just Trump. He's aggressive in how he goes and does the negotiating. He's aggressive in statements. He contradicts himself all the time. I think because he has spoken in that way, and the US is seen as the great military power of the world, they can't be seen to lose a war and sort of run away with their tail between their legs. So I think they sort of like talked themselves back into this corner, and I think now they have to come out and, if they now escalate and then lose, or they do strikes that don't have a strong effect, I think it's really problematic. I think that it really shifts the world order a little bit in 2, 3, 4, 5, 10 years time, where you start to see the Chinese, Russians, Iranians Iranians will control more of the oil flow coming out of the Gulf. The Chinese will go down the financial route of trying to control the finance centers. Because all of a sudden the United States have lost that, real military, and everyone says, the dollar isn't backed by anything. Well, when that military and army turns up, it's backed by something. But if they're seen to not be able to win one, I think it's a problem.
Yeah, absolutely. It's one of those. It's not about losing. It's if you don't get the win, that's a loss in its own effect. When you're watching sports, a big boxing match, if you go in thinking this guy's gonna absolutely wallop him, and it goes to decision, that's kind of a loss in its own way.
Yeah.
A question for you is: if we go into the midterms and Trump loses, does that force a de-escalation, or can he just continue to dictate?
I don't think this will be a talking point by the midterms, to be honest. I think this will be all wrapped up by the midterms. I'm not saying it's going to go back to normal how it was before, but I don't even think this will be a talk. I think this will be something that you bring up and be like, oh, that was embarrassing or whatever. But I don't think it's something that you will be talking about at this time as if it's still going on in November. I don't think that would be the case. I do think Trump's polling is sort of diabolical, and I think there's a strong chance. I think there's a small chance he loses both the Senate and the House, to be honest with you. And I think that worries Trump and the Trump family for, with the potential of him being impeached, etc. So I don't think the midterms look good. I think the thing that we can hold on to here is that the Fed are still holding rates at a relatively elevated level, and they're going to have to hold for a while longer because of this inflation that's going to come from these higher oil prices. And the result of that is going to be weaker economic growth. And with weaker economic growth, the Fed will want to cut into that, especially with the labor market. The labor market looks resilient, but there's cracks underneath it.
Absolutely.
People are not leaving their job. The quits rate is down. If the labor market is strong, the quits rate should be up. People should believe that they should be able to leave their job, go and get another job, etc. But there's not that confidence in the labor market. So the Fed are not protecting both. They're not. I think they'll be looking at both sides of their mandate rather than just the inflation side. But I think they have to hold rates higher for longer. Q2, probably Q3. But then I think you get like a consecutive number of cuts in Q4 of this year. Maybe you start in Q3, but probably not. Probably Q4 going into 2027. And I think that's what ends the bear market, puts us in a new bull market where growth is weak. They need to get in front of a weakening labor market, and you see the rate go from 3.75% down to 2.5%.
Yeah, no, that makes a lot of sense. I will circle into the macro after. I've got a lot of questions in that area. I'll close up the geopolitics side of things. I think you're right. I think most likely this will not really be much of a talking point. Either it has de-escalated, or it's something that they managed to kind of push to the side, at least publicly. They managed to just make it seem like a small thing. It's all propaganda. But I do think a lot of it depends on the next couple of weeks. This will determine whether this is a type of forever war, which you could argue several of the parties involved want it to be that way, or we do see some sort of de-escalation. But I think that wraps up the geopolitics very well. You did mention the UK, Australia, etc. I think Trump has made a couple of comments regarding NATO and the UK as of late. I believe the King Charles is headed over to the States for a meeting to basically speaking for the Congress. I think that's going to be very interesting, as you could see some more relationship building, or Trump as a way of just he can make a crazy comment, he can cause more upheaval in the UK, etc. So I think a lot does hinge on what goes down in that meeting too. Not necessarily huge picture, but I can see, the separation of the US and Europe, depending on how that goes as well.
Yeah, I mean, I think they're already separated, to be honest. I think I wouldn't be surprised to see the US leave NATO. Maybe it is surprising, I don't know. But before it was just out the question, wouldn't happen. Now I think there's like a small chance it can happen. And considering that it was the US that sort of created NATO, I think it'd be. But I think the US are asking themselves, well, you don't come to our aid, so why should we come to your aid? But at the same time, the US does go and just do its own things. Then why should the
Absolutely.
European allies have to just jump in because the US has gone and done something on their own back, not been consulted, and then all of a sudden it's gone a little bit wrong on their side, and they're having to come in as the cavalry almost.
Yeah, no, that makes a lot of sense. I do think, I guess we have to stay on geopolitics for a bit longer then. If that was to happen, I think you open up the door for Russia to make a big push on Ukraine, which really wouldn't look good. That would probably be
No.
very problematic. I think if the US bows out, I think they're going to go for it. And I think when you start to see that happen, you do open up the doors for, potential more chaos between China and Taiwan. I think that's a bit of a different one. I can't really see
Yeah.
them making a play. I think that seems like a bit of a rush. But I do think if Russia pushes quite hard and America is not supporting the rest of Europe and NATO, and then you're in a position where I believe Russian sanctions on Russian oil were taken off recently.
Yeah.
That's going to be an interesting turn of events, right? If you start to see
I
Russia
think
in a
only
stronger position.
sorry, I think only temporarily, because I think
Yeah.
the US just want more oil in the market to help bring the price down. So I think that was just a temporary measure. I'd be very surprised if those sanctions didn't go back on once this settles down.
Yeah, but if we do see the separation further and formally between NATO and the US, Trump's the type of guy, if he can make money off something, if he benefits from it, he might say, you know what, I'm not getting involved in this. And a lot of ego as well. If he's like, well, I'm no longer a part of NATO, F you guys, handle it yourself. And I think
Yeah.
that is very interesting. I have two questions for you to wrap that part up. So do you think we would have been in this position if Biden stayed in office or Kamala Harris won? Is this a Trump thing? Or, it's very interesting because I've
I
seen conversations where Israel tried to goad former presidents into this war in the past by saying we're going to
they
attack,
have.
get involved. And apparently, Obama, Biden, etc., said no, but they seem to have got into Trump's ear. So do you think we would be here if Trump wasn't president?
I think probably not. But I mean, again, this is just rumors and speculation. The rumors are that the Israelis have something on Trump. But again, it's very very hard to know that. It's just complete rumor and speculation. But I would say no. In short, to answer that question, I would just say no.
Yeah, no, I tend to agree with that. And we spoke about, the US leaving NATO, this being a type of forever war, even if it's in the background. And we've spoken about, Israel really pushing to take up more land. Does this all get reverted if, the Democrats win the presidency in 2028? Or does this just persist and, they're all the same?
I think this part would persist. Um, I think some of the crypto stuff, like crypto legislation, wouldn't persist. I think that would be like unwound, or some of it would be unwound. Um, I think it depends on certain things, but I think deals made. For instance, Trump put tariffs on in his first presidency. A lot of what he did in that first presidency that Democrats complained about, they kept the same when Trump lost and Biden came in. So I don't see them coming in now and then undoing, because at the end of the day, Trump is doing this stuff for the US to gain. Yeah, sure, he gets bits wrong, but I don't see if he gets those gains why the Democrats would get in and then give those up. I think a good example is the tariffs that Trump put on in his first term in 2016 to 2020, and then the Democrats just kept those tariffs on in 2020 and didn't look to take them off. So that's the sort of example I would use for how this probably goes forward. I think they'll be strict on things like crypto, I think the Democrats would look to unwind some stuff. It's got to be easier to unwind. Like tariffs are more difficult, but some legislation I think that supports crypto or favors crypto, I think they would, or maybe they wouldn't, and they would just try to gun for like Barron, for instance. If he's doing insider trading or something like that, I think they would try to clamp down on something of that route. But I don't think it'll be much, to be honest. I don't think they'll undo a lot.
Yeah, that makes a lot of sense. You're right. They didn't really do too much of that last time. I think they may clamp down, but I think we saw both parties trying to win the crypto vote for 2024. So I kind of feel, at least in the build up to it, they're going to try and win the crypto vote on both sides. Now, if they do win and they continue into, the Democrats win in 2028, then you might see some unwinding. But, if they campaign a lot on trying to win that crypto vote, then perhaps not. I want to touch now on some macro and how this moves into it. But I want to ask you a question. There's two sides to money supply and money moving around the market. We're going to touch on the Fed soon. But there's also the government side of these things. And the government are pretty much in a position where if they can justify, they used to have to justify to the people. Now it's just justifying to themselves. If they can justify more government spending, depending on the reasoning, if it's a recession, that's not great. But if it's something like this, which is let's be honest, it's an optional war, could they use this chaos as an excuse to basically print? And we always talk about how what's good for the market isn't necessarily good for the normal guy or for the world. Could this lead to some printing?
No, not in this sense. It might come because of the economic shock because of this, but they're not just going to for instance, bond yields have, not in the last couple of days, but well, today they have, but not in the last couple of days. But before that, they were soaring, going significantly higher. That was based off of this war, with bond market participants pricing, basically, pricing in higher inflation and pricing greater issuance, i.e. the US are going to issue more debt to fund this war, replenish stockpiles, spend on military equipment, etc. So bond yields going up because of inflation and higher inflation and greater issuance. This is not an economic crisis. It's not a growth concern. It's not. The oil supply shock could be something different, but again, it's a supply shock rather than a demand shock. You don't really want to ease into a demand shock or a supply shock rather. So I think it might be the case that you get economic weakness because of this war, higher oil prices, etc. That's going to basically sort of see people tightening up on their spending. Should you get that economic weakness, that could then say it was to the Fed were very worried about inflation, etc. I don't think you're going to get to that point where they really overfavor inflation. I think they are going to favor weakening growth and a weakening labor market. So I don't think you're going to see it like that. But I do think you're going to possibly see weak economic growth, a weaker job market, a weaker labor market, and the Fed will cut into that. But they will stay on hold for the short term and medium term. But should you see a more significant deterioration in that economic growth and that labor market by Q3, Q4, they might, I wouldn't necessarily say print more, but they may cut rates more significantly and they might put more money into the financial system, for instance. But again, it's not going to rival something like COVID unless you see a real oil shock here. But that would be because the war prolongs. You then have to ask yourself, does Trump want a prolonged war and the price of oil to go to 150, 180, $200 a barrel, Brent crude I'm talking about? No, probably not. So then you have to say, okay, well, how significant is that economic weakness going to be? I still think we see economic weakness. I just don't think it's so weak that they have to do mass stimulus. So don't be wrong. It can mean we get cuts in Q4 of this year and 2027, like a number of consecutive cuts, but it doesn't mean you're going to see this like mass influx of fiscal stimulus or whatever,
Yeah, makes sense. Okay, so moving on to macro in a bit more detail. $1 trillion wiped out of gold today. $777 billion wiped from the stock market. Silver down 7%. Bitcoin's doing okay, which is interesting. Bond yields up. Now things move. So perhaps since your market update, things have already changed. And Tom, that's crazy. That's big. Now, what do we expect going into the weekend? And I want to understand why. I think dollars up too. I think dollars strong. Obviously, that means demand for dollars up. People are pretty much selling all of these assets. It was not surprisingly for ourselves, but I guess for the layman, selling stuff like gold and bonds. These are seen as safe haven assets. Yet both pull back. What on earth is going on? People talk about risk on, risk off. They're selling everything, and they're sitting in the dollar. Give us a short breakdown, because Trump talks. He's all talk, and he chickens out. And I don't understand how the market isn't factoring this in. What's going on?
So I think what you said there is right in that sentence, in that everything is being sold, which is, there's no flight to safety, or sometimes things can be so fearful that there is no flight to safety and people just want dollars. They say, I'll ride this out, but they're not going to rotate into a new asset. That's possibly one part of it. The second part is, when you look at the pricing of stuff, we are seeing these big tactical bounces, like the S&P, for instance, went straight back into its resistance area, and it's still sat there like 6.5, 6.6. I'm not sure we see a clearance of 6.650, to be honest with you. But before going into this, again, yields were going higher, so you were seeing that was being priced off the inflation and the greater issuance. So you've not really had that move into the safety of bonds. But what we did see, and particularly in the 2-year, is the 2-year was coming down, and it has come down again today more significantly. So what I read that as is this: the yields were going up because of greater inflation and greater issuance. So people don't hold those assets, but they're not fearful of an economic crisis. So they're happy to sit in stocks, equities, gold, other things. But when they start fearing for economic growth, that's when they flock to the flight to safety trade, which is the dollar and bonds, which is why then yields then come down, because bonds will be bid going into economic weakness. So I think the market is now and that's why equities are now broken below their lows. So equities were in a range for like 6 months. They've now broken below those lows. And I think that is that shift that we're now seeing, that's, people moving out of bonds and staying in equities, like hidden in equities in the indexes, for instance, because they're not too worried about economic growth. But I now think the market participants are at the part where they're worried about economic growth, and they're now moving out of equities, which is why we've seen them break down from their horizontal supports, and they've moved into bonds as a flight to safety, because foreseeing a potential economic weakness. So it's a slight shift. A slight shift in fear of, we're not worried about growth, but we're worried about what's going on geopolitically. But now we're so worried about what's going on geopolitically that we think that will really negatively impact growth. So we're now playing the recession trade.
Okay, makes sense. So there is a level of justification. It's not just panic. That makes a lot of sense. Moving on to the one asset, aside from the dollar, that's doing pretty well. Oil from 102 to 112. If you bounce around poly market, right now, there's a 69% chance, people think, by the end of April, we cross 120 at some point. We saw things higher when this war kicked off. We've already spoken, the Strait is selectively open. What's the score with, gas prices too, of course. And I think a lot of people forget about the price of food, fertilizer, gas, etc., jet fuel, in a sense too. I'm not keeping a super close eye on the prices here. But oil, where are we headed? Are we going 120 first or 105?
It's very hard to say, mate. It depends on if a deal is done. Ultimately, even if a deal is done, it takes a long time for production to get back up to capacity, to where it was, to get those barrels of oil back into the market. So I think it's possible. If you ask me that question, do we see 125 or do we see 80? I would say, or even like 85, 90, I would be picking 125. And this is Brent crude oil, not WTI. I see some people float WTI. That's the West Texas Intermediate oil that comes out of America. Sort of forget that. The focus is on Brent crude, which comes out of the Gulf. That's the oil that's mostly being whipped around. Price action whipped around, I mean. Yeah, your numbers were tricky because the volatility is so significant, and with that level of volatility, 105 to 120, both of them could get touched in the next 4 or 5 trading days. If you told me 85 and 125, I'd be picking 125 would be hit first.
Yeah, that makes sense. And are you keeping an eye on the price of gas, etc.? Because these things are much harder to store than oil.
I haven't been. I'm not really an expert there. I'm more focused on the oil side of it. There's a few people that I read and listen to about gas, but I've more spent my time working out, trying my best to work out the oil situation, to work out then how equities will price, bonds will price, etc. To then work out how crypto will price off of that.
Yeah, that makes a lot of sense. No, we're in a very interesting time. I guess, Tom, we've covered for the most part, I would say the macro side of things. I would like to touch on tomorrow's data. We have labor market data coming in tomorrow. On the 10th,
Yeah.
we have CPI print. The first question before you dive in, what time frame is the labor market for? Because I know it's a lagging indicator.
It's March's data, so
Okay.
we will still do a report. We will still do a report on it, but it's not. It gives you a clue as to how the labour market was faring pre-war, but it doesn't. It doesn't tell you what changes have been made since the war started. So I mean, forecasts are for sort of 50 to 60k, and for the unemployment rate to remain at about 4.4%. So I mean, it doesn't mean that the Fed have to do anything and change. You know, it's not going to change the Fed's outlook. They're going to stay on pause and weather through the potential inflation impact, or the very likely inflation impact that's going to come from higher oil. I think the market might have a quick small move when the data releases tomorrow. But I think beyond that, it's once it's out, 30 minutes later, everyone will have forgotten it. To be honest, I think it's about as non-important as that. If this war hadn't started, this data point tomorrow would be big, because I think that's what everyone would be watching. But since the war started, the shift has now happened where the markets and the Fed, and obviously the markets because of the Fed, will be shifting, and now not on the labour market and on the inflation side, to work out how bad this inflation impact is going to be, and then how likely the Fed are going to have to remain on a hold for because of this impact. And that's why everyone's watching because of this conflict. And that's why everyone's watching when is this conflict going to end, so they can start working out how high is inflation going to go, is it going to creep into inflation expectations, etc. And that's the difference between potentially causing an economic crisis and not. We'll still do the post tomorrow, the market pulse on the data tomorrow, but it's not too important. Next week's inflation data is far more important. Expect volatility tomorrow.
Yeah. Okay, makes sense. We will put out our expectations for that data beforehand. We can even talk about it here potentially. Inflation data. So the 10th, you said more significant. It makes sense. Is this once again for March?
Yes, it is. It is for March. Okay. So we did see slightly hotter PPI numbers before we came into this conflict, or before this conflict kicked off. The expectation is still for inflation to. I'm just looking at the consensus numbers and the forecast numbers. It is expected to increase quite significantly. Like the inflation rate, headline inflation is expected to kick up to 3.1%, having previously been at 2.4. Now, again, that's going to be the case with this kind of war. So it can almost be somewhat looked through as well. Because if you then say, okay, in 6 weeks' time, there's going to be a resolution to this war, then we'd expect 8 weeks beyond that, the price of oil to start coming back down again. And, the market just to sort of look through it. But at the moment, there is this fear of higher inflation, but it just depends on how long this conflict goes on for. If there isn't a deal, the conflict continues, the Iranians start saying, hang on, we've weathered this very, very, very well. We can now start putting, $2 million bills on every tanker that goes through, of the price of oil then remains high. So I think, I think it's just very, very difficult to work out. I think ultimately, dumbing it down, the Fed will stay on hold in Q2 and most likely Q3. but will have to cut more aggressively in Q4 this year and into 2027 because they've stayed on hold for too long, and they'll have to get in front of the economic weakness that will likely be coming in Q3, Q4 this year. Probably Q3, they'll have to get in front of it in Q4 or catch up to it in Q4.
Yeah, makes sense. And this is CPI, correct? Does this include gas prices? I know they crossed $4 in the States. So what does this include in CPI?
I believe so. You caught me on the spot there. I believe so.
I think so. Yeah. And that's clearly moving. I guess a lot of this for everyone watching too is it's going to come down to expectations versus what actually happens. I think everyone's talking about inflation and has been for a while. So if expectations are already high and things come under expectations, that's an interesting sign. It's a lot of the worry will be priced out at that point. That makes a lot of sense, Tom.
Yeah.
I was looking at some poly market odds coming into this.
Yeah.
Expectations for, and I'm not a gambler, but for this conversation, we might as well have some fun. And while we have some fun, Abror, perhaps load up and get ready. We're going to talk about crypto with Abror. So when we're looking at poly market, I see there's a market there where they're pricing 30% for 0 rate cuts, around 30% for 1 cut. And we've spoken about more than 1 cut, haven't we? So I guess for 2 cuts, we're looking at 20%. What do you think of those odds? 30 for 0, 30 for 1, 20 for 2 cuts, 50 points.
So I think it's come down a little bit now. I have 1 cut at 27% and 2 cuts at 20%. I think the bet is for 1 cut. I think so. You could do 2 cuts. It's an outside punt, but again, it's 5x your money. Buying at 20% today, it's 5x your money. But again, this is a little bit of an illiquid market, so you can't really jump in with big size. But I think 1 cut can happen, and priced at 27%, you're looking at like a 3.7x or whatever it is. I think we'll get cuts. I'd be very, very. I'm really confident we won't see hikes. Like, I'm very confident we won't see rate hikes. So then you have to say, well, the Fed stay on hold all year. Well, the conflict would have to really, really be prolonged. Now, whether Trump escalates or even de-escalates, I can't see this being a prolonged conflict. Like, I think I said this a couple of weeks ago. I don't think this lasts longer than the end of April, or goes into May. I think now there's a chance it might, which is obviously not good. But does it go to the end of May? I'd like to think not. So if you then say by midsummer, you've seen the inflation impacts come through, but oil is starting to trend lower, there's no reason why they can't get at least 1 cut in this year. I think that's the safe bet. That's the bet that I've started to put some money into.
Yeah, that makes a lot of sense. We are getting a change of Fed chair as well, and he's going to be a lot more dovish, I believe,
supposedly.
than Powell. What do you think? Are we still expecting a dove, or is he a hawk in hiding?
Yeah, no. I think he'll be a dove. It's just whether or not he gets voted in time. To be honest, yeah. I mean that's another just complicated. It's just Trump. Like again, he's caused a bit of another by putting so much pressure on Powell and the investigation into Powell now. Powell now won't step down until this is concluded. Senator Tom Tillis said that I think he's the deciding vote, or would be the deciding vote for the Republicans in the decision, and he's not up for re-election, so he doesn't need to. He can just do what he feels best. He said he won't be approving of any nominations until the investigation into Powell is concluded, and wholeheartedly concluded. So I think Trump and not Trump, but the Department of Justice is going to have to drop it, i.e. Trump is going to have to tell them to drop it, so that this can be passed through. He probably gets in, but I wouldn't be surprised if Powell. I don't think Powell will stay on, not as chair, but stay on in his seat as governor. I don't think he will do that, but he might be behind closed doors threatening to do that now, for Trump then ease some of the pressure on him.
That makes a lot of sense. Tom, we smashed it with the macro. A couple of short questions, I guess more from a on-chain perspective. I know I respect your on-chain skills, We had that
Yeah.
conversation. I know you're the on-chain guy, but you're not doing forensics. So ETFs, they're moving neutral, and Coinbase premium is still down, so low US demand. Anything particular we want to comment on here / summarize?
It's just not interesting. I think that's the main thing. There's not like a key underlying driver here. There's not, there's nothing here that you look at and you say, oh, this is really bullish under the surface, or oh, this is really bearish under the surface. It's not. It's just flat. It's just being whipsawed by the news, being whipsawed by the macro. I think we're in this period of chop consolidation between 60K and 72, 74K. And I think this is going to last maybe probably another month or two. And I think you want to be buying into the very low 60Ks. And if you get moves into the 50Ks, you want to be really going for it. Anything below 54K, that's the realized price. I think it's a really, really go for it kind of moment in terms of buys. So I think that's mostly where we're at. And you've got to find these big moves down, buy those wicks and be done, and forget that how choppy it is and how much it trades in the week or so after those moves. I do think we'll get those moves, and I think you've just got to buy those big bits of weakness if and when they come. I do think it's a when they'll come.
Yep, that makes a lot of sense. Obviously, we have shared our full playbook for Cryptonary Pro, and we discuss individual playbooks with Inner Circle. But a kind of conclusion is we see that 50 to 60 zone being tested. A lot of this comes down to a couple of cost basis levels sitting within that. But help me understand what will be the catalyst to push us between the 50 and 60. I know the levels sit there, and I know previously in bear markets we tend to touch these levels. But aside from people being conscious that we are going to, like, the cost levels are there, what will be the catalyst to push us into the 50 to 60 zone? Because I'm seeing massive fear across the board. Quantum's being talked about. There was something recently, a couple of days ago, talked about by Google, a bit of a misunderstanding. We're seeing terrible things happening in crypto with these exploits, which I'll touch on with Abror in the next couple of minutes. So what will actually be the trigger to push us into the 50 to 60 level? Even though I understand bear market levels, I understand they're there, but there's no, what will be the actual push? Or is it just we're hedging? That's why we're going to be, putting laddered bids in, but it's still likely.
No, I think it will come. I don't think it's like a hedging strategy. It can be anything. A catalyst can be anything. I think it's like a time capitulation thing. Rather, I think we've had the majority of the price capitulation. I think now we're just in that time capitulation where you see retail activity is down like really, really significantly. And you see bear market. The way I sort of explained to a friend the other day, he rang me and just was like, oh, this is hard market now. It's been a hard market for 6 months, blah, blah, blah. And I'm just sort of sat there saying, you're very, very greedy. You've had 3 good years and now you're struggling on 6 bad months. Look at it as you might go and get 12 bad months to 3 good years, because that's what these like 4-year trends look like. So that, even if it's short by 3 months or longer by 3 months, whatever, there's probably still more time ahead here. So I think the catalyst can come from anything. I think looking forward, you have to, rather than say what's the catalyst going to take it lower, you also have to look at what's the catalyst that's going to take it higher. I think the catalyst there that could take it lower are far greater than the catalyst that could take it significantly higher. Sure, we could get pop into like 74 to 80K, somewhere like that. I do get something like that in the next 3 to 8 weeks if there is a real de-escalation in this war. But you still have to look beyond that and say we're unlikely to get cuts anytime soon. The liquidity in the financial markets is pretty poor. It looks like it just looks from like a lot of different angles. Where is that catalyst going to come from? Is big money going to buy into Bitcoin at this moment in time because of the quantum threat? I saw Brian Armstrong tweeted this morning that he's going to start spending a lot more time on that threat, and I think someone like him needs to take the lead. I don't think he'd be Sailor. I think he just looks mental at the moment. But I think if Brian Armstrong takes the lead on that would give a lot more people a lot more confidence. So I think, should we start to see a bit of progress there, the war starts to de-escalate a little bit. Don't get me wrong, you're going to get the consequences of the war. Whether we get, say we get the war de-escalating tomorrow, you're going to get the consequences of the higher oil prices, because that's going to be prolonged because of the getting the capacity back to full production, etc. So I do think we're going to see that economic weakness in the coming months and quarters. So then you look at all that, and liquidity going into financial markets is still subdued and relatively poor. Rather than ask yourself what's the catalyst that's going to take us lower, you also got to ask yourself what's the catalyst that's going to take us higher. I think when you look at all those potential, headwinds and tailwinds out there, I think the headwinds really overrule the tailwinds at this moment in time. So, and then you say to yourself, are we in a value zone? 67 is like on the border of it, but should we start getting to 61, 62? You're there. Should we then get into 57s, 58s? You're there again. So I think that shows like 54 to 62 is pretty spot on. But yeah, I would look at the whole picture rather than what's the next catalyst. It could just be the case that you get positive catalyst, price doesn't go higher, you then get one small negative catalyst that people then just say, oh, I'm done, this couldn't go higher, and yet we're starting to move lower again and off of nothing. So then people would sell into that and almost capitulate, and that would probably be the tough time capitulation part. Sorry, I know that was a long answer.
No, that makes a lot of sense. That was a really good answer, actually. We need to clip that and YouTube it. I would say 2 comments there. I think you called your friend greedy. I think 60K is pretty greedy, in my opinion, Mr. Tom. 2x from here. And the second thing, in regards to positive catalysts, I think that the wrapping up of this war will be a positive catalyst. I think even if fundamentally things are not changing, as much as macro matters, as much as technicals matter and on-chain, so there's the social side of things. And I believe that a lot of people are sitting on their hands a little bit worried that they think escalation of war equals Bitcoin down. Now, you've already touched on why that's not necessarily true, but I think a lot of people who are perhaps less informed, who aren't watching this stream, I think those people are just sitting there waiting for good news. And that in its own way could be a positive catalyst. The quantum threat, as you said, absolutely. I think one of these guys will step up. I think you might see a union of a couple of these guys. I think the leaders who I think will step up, who have the biggest say in the matter, will be the likes of an Armstrong, will be the likes of a Larry Fink, will be the likes of a Sailor. But I think more so than a Sailor, Sailor's seen as a shill. Whereas I think BlackRock, they're seen as more professional. I think with Armstrong, he's not just a Bitcoin guy, he's a crypto guy. So yeah, I think it's inevitable for these things to be handled. I also think you're right. We won't see a catalyst necessarily like we saw when Trump was inaugurated. That was massive. Like, we just went parabolic. I think when liquidity increases, you need some serious cuts for that to happen, I think, and that will push everything up. Maybe some kind of bubble burst with the AI boom, where now people are like, oh my goodness,
credit,
I want to rotate into a different asset. I think if I was to add anything else onto that, I think we've covered pretty much all of it. I guess I'd like to go over, please summarize macro for Q1. Summarize Q1 for me.
Very turbulent would be the word I would describe as something like macro for Q1. You've had the pausing of cuts. Remember, going into the start of this year, there was still anticipation that we get cuts at the beginning of this year. That's not materialized. You've then had the Fed sort of suggesting that they're willing to stay on pause for far longer. We've had cuts pushed out significantly. And then you've had the breakout of the war. So that's then made inflation, or is likely to see inflation go significantly higher, pushing cuts out even further, to the point where the market was actually pricing in the likelihood of a hike as being greater than the chance of a cut this year. That's now reversed again. And the markets are starting to look at the potential economic weakness side of it for cuts later on in the year. But essentially, all of those headwinds is what has brought down risk assets. And it's positive in some way because it gets us close to like deep value areas if we start getting close to those areas again. And that sets up buys for the long term. So I think you do need these quarters like this to kickstart the bear markets, or to really drive prices into those like deep value territories that you see in bear markets. And I think we're 6 months, 7 months into this now. There's no reason why we can't see prices bottom in the next 1 to 5 months.
Makes sense. Before I ask you for your Q2 predictions, Could we see hikes in the next couple of months?
No.
No.
You can, but no.
No. Okay. I hope that answers
Yeah.
a lot of people's questions. I've gotten that on every platform. I got text messages, Discord, X. Everyone's DMing me the same question right now. So thank you for that answer. Q2 expectations, right? You're not an oracle, but you can do your best. What do we see throughout Q2?
Price won't go above. Price won't go above 80K, and it will go below 60K. That's my bold call.
Okay, makes sense. Tom, thank you very much. I feel like we touched on all things macro. Abror is going to come in and talk about crypto. So I'm going to tell him to join now. I guess while we wait for Abror to join, Tom, what's the score? Abror straight away. What's the score? How are you feeling? What's going on? Did you go to the steakhouse I recommended?
No, I haven't yet.
What's going on?
No, I haven't. I think I'm out this evening, seeing a friend just locally here. But I probably will try it. I've got Sunday roast, Saturday. What have I got? And I might go to the Spurs game in a few weeks' time because we've got a new manager now. So that's about as exciting as it gets. Other than that, just trading.
Perfect. It's the traders market.
Who
are the Spurs playing?
We've got Sunderland away. Don't worry about that. It's a away game, so I just pray that's not an absolute pain to watch. And then we've got home game the week after against Brighton, I think, and I'll try to go to that if I can.
Okay, perfect. I'll be doing the exact opposite. I won't be trading, and I won't be going to any Spurs games. But no, thank you, Tom. Really appreciate it. I'm going to check right now. Abror has joined us. One question for both of you, actually. Hi, Abror. How's it going? Someone asks, there's a rumor on Polymarket that Trump will be removed from office. What impact would that have on the market? Let's say Trump gets impeached when, post midterms. What would happen to the market if he was to get impeached?
I think it'd be a bit of a disaster. Like I think the market would significantly sell off on that because I think it'd be so. Maybe initially it'd be so uncertain, so unclear that the market would sell off. But then beyond that, say all of a sudden there's not Trump in the way, because Trump is problematic as well. He comes out with some mental statements and some of his actions are crazy. Like the markets were easier to trade when Biden was in charge because nothing really happened. You just had this significant fiscal stimulus. But I think it'd be mental in the first few weeks. Trump would fight back. It'd be really ugly, to be honest. The markets would sell down. But should he then be impeached or whatever, and then people realize, okay, that Trump is now not in the way of this market, I think the market would then recover and do quite well.
Yeah, I tend to agree with you. Abror, thoughts?
Yeah, that depends why he's being impeached. If he's fucked up the whole world economy, that would actually be bullish that he's being impeached, to be honest. Because markets would be down so badly, and they would be looking forward for better economic growth, better inflation numbers and stuff like that. So I think it's more contextual. Yeah, that's what I think. If he's unpredictable and uncertain, the market would already be down. And if he's removed, and who's coming after him, if it's something that markets like, that would probably be bullish as well. I think it's more contextual.
Yeah, makes sense. Perfect. Tom, thank you very much. Appreciate it. See you later. Get back on the charts, put some trades in. Let me copy trade your hyperliquid vault. And then Abror, welcome. You're very close to the camera and your mic is not very good. Okay, you're better. Now you're really far from the camera, but your mic sounds a little off.
Really? I'm not sure.
That might be better. Oh yeah, it's a little bit scratchy is the word.
Scratchy?
Yeah, I don't really know how to describe it. Say something, give us a sentence and let's see if it's better. Maybe it was because Tom was on.
AVAX short played out.
Okay, yeah, good thing that's one trade I did take. It's a little weird, I'll be honest. Is there any way for you to change the mic? It's just a bit of an ear sore.
Sorry?
Is there any way for you to change your mic? It's a little bit, I can't describe it. It's like there's a noise to it, like a static. Yeah, try and switch mics if possible.
There is only one mic. I don't have like 2 or 3 mics.
Ooh, no headphones?
I do have headphones. Let me try.
Let's give it a try. Let's give it a
It's
try.
not gonna look on me now.
Yeah, no issue at all. I guess in the meantime, yeah, no, let's see. Those are lovely headphones. Let's see if there's any questions in the chat.
Hey, can you hear me?
Yes, that's decent. That's decent. We will go with that, Abror. Okay, Abror. That was a really good start, to be fair, about an hour talking macro. Now you're on the hot seat. I have lots of questions for you. So are you ready to get started?
Yeah, I am. Let's get started.
Yeah. Okay, absolutely. So first topic of the day, $285 million hack, basically, on Drift. First off, tell the people what Drift is, and then tell us what the F went down. Your face says a lot, to be honest, but yeah, keep going.
Yeah. So Drift is Solana-based perpetual DEX, and they also have like lending markets and stuff like that. So they had roughly like $800 million in TVL, and they lost half of it due to exploit just yesterday. And yeah, this is what's happened. You know, it was very unfortunate and sad to see, because it wasn't really a bug in the code, but rather human mistake. Okay, so that's why this exploit was possible. And yeah, hackers stole like close to like 280 million from Drift.
That's not great. That's not great. So my question off the bat, I think I texted you this morning. Are my stables in Camino safe right now?
I would say so, to be honest, but again, it just showed like Drift wasn't some like like lower quality platform. Like it had serious backers. It was like one of the top platforms on the Solana ecosystem. Camino isn't affected by the exploit that happened to Drift, but ultimately, I think if you have like I checked this morning the yields on Camino, and it's like 2%. Would you risk your entire portfolio for 2% yield? And currently we are in the market where like in 2-3 months time down the road we would probably looking for accumulation. Do you really want to risk your whole stablecoin stack for 2% yield, while you can accumulate like very cheap assets in like 2-3 months down the road? So that's my thinking so far. Yeah.
That makes a lot of sense. I tend to agree with you. I'm going to quickly check what is happening with Aave. Let's see what return we're getting on Aave. So we're getting around 2.7% on Aave too. A comment to you, I know you're a Hyperliquid guy and we all love Solana, but it was very interesting. This is a terrible exploit for Solana. And I saw a lot of the Hyperliquid maxis coming out and roasting, but you guys have like 4 validators. And if anything, for me, this was a sign that none of the other blockchains, and I know it's a specific project on the blockchain, nothing comes close to Ethereum security. And heck, you're getting more of a return on Aave than Camino right now. What lessons can we take away from this?
Okay, I want to start from the top, right? First of all, like Hyperliquid has like 18 validators, and you just need 4 of them to collude to actually steal. So that's the problem. It's not like they have like 4 validators only. They have 18, but 4 is enough to hack the bridge. Okay, that's the thing. The second thing, I think even on Ethereum, even though like it's the most decentralized platform, application-specific hacks can still be possible. So like just because Ethereum is safe doesn't mean, like, for example, Aave is okay. Okay,
Yes,
because
absolutely.
the application specific exploit can happen. And thirdly, what lessons can we learn? I think I was writing a market post, and I was like writing down like my notes. It's kind of like a small essay. So what not to do? Okay, having more than 5% of your portfolio exposed to a single platform, I would say. Okay, so you can always diversify your exposure. So you can have like Camino, park your stables in Camino. You can park your stables in Jupiter Land. You can park your stables on Aave on Ethereum, on Aave on Base, on Aave on like Optimism, Arbitrum. So you can diversify your exposure. This is what users need to do. No more than 5% of your portfolio exposed to a single platform. And also, one of the problems is drift is that the reason why I personally don't use drift is because they require lockup. So whenever you try to withdraw, you need to wait like a day or two, or like depending on the vaults, some of the vaults, they require like 7-day cooling period. So like if you are an investor and trader, that 7-day lockup can cost you like 10, 15, 20% upside, because you won't be able to deploy when you need it. You'll have to wait 7 days, and in 7 days it's up like, the asset could be up like, I don't know, 30% in bull runs. So that's why like it was a red flag for me. So I think the lesson is that don't use platforms that require you to lock up your stables or any other assets. So liquidity is important in crypto because it moves very fast.
Yeah.
What else? Don't lock up your tokens. Yeah. Diversify your exposure, and don't chase yields. I think, again, as I said, in like 2-3 months, I think we'd be looking to accumulate. And yeah, you can get more than like 2-3% if you actually enter in a proper time.
Yeah, no, that makes a lot of sense. I tend to agree with that. Look, hack's big, and it was a lot of money. So surely they're going to catch these guys. A story, I got scammed 50K hacks from a MetaMask back in 2021. No idea how. Went through with some on-chain guys to go through all of my links. Can't see what I clicked on. Think I may have clicked on the wrong Alchemix website, but I lost 50K back in 2021 and never caught the guy, right? I went onto Twitter and I saw that there were like 15 or 20 other people, and he ripped their wallets. The guy stole like a few $100,000 in like 24 hours through some sort of wormhole and completely gone. Now, for these guys, what's the likelihood they get away with this? It's a lot of money, bro.
Yeah. So there are rumors. I think I've seen people saying that that's actually not true, but seems like the hacker interacted with Backpack Exchange, and we covered Backpack a week or two ago, and it's an exchange that requires you to KYC. Okay, so if he really interacted with Backpack, that means Backpack could have KYC'd this guy already. Okay, but I've heard kind of opinions that it's not true, that he didn't interact, blah, blah, blah. But I think if that's the case, they can go after this guy. And the second thing, they can probably offer a bounty. If he's a good person, they can say, okay, keep the 10% of whatever you stole, send us the rest, and we won't prosecute you for this. That could work potentially. But if it's some North Korean hacker, I doubt that would work, to be honest. So yeah, alternatively, they will need to somehow find a way to make users whole. I think if they have like good backers and investors raise money somehow. But I see that problematic because we're in a bear market. But yeah, let's see. It's been almost 24 hours.
Yeah. Well, I know a lot of people were made whole after the bear market back in 2021, 2022 across some of these platforms. It just takes a long time. And it's a shame, I think, with Mt. Gox, like people got their Bitcoin back at the original price or something. I think with people who lost money on FTX, they got their like SOL worth $5 back if it was like $300 of SOL on exchange. Bro, I believe it was the USDC was swapped to something called CCTP First up, is that correct? And what is CCTP? Is it a different stable coin? Is it a different asset?
No. It's kind of like a communication infrastructure by Circle, CCTP, that was developed with Chainlink. So it allows you to bridge the assets from one chain to the other. So if you have USDC on Solana, you can pretty much transfer that to Ethereum very quickly using CCTP. I think it's even free. I'm not sure whether like it has a fee or something like that, but whenever I transfer from Hyper EVM to Hyperliquid Core, it charges me 0 fees. I'm not sure like whether it's the same thing when you bridge from Solana to Ethereum, but essentially it's a bridge. So the hacker bridged using CCTP, and the problem was that everyone was trying to get Circle to freeze the USDC of the hacker, and they weren't replying for like 6 hours. And it was like a daytime in USA, in New York, where they're based.
Why? That's it. Why would that, how could that happen? You know, when they're a very competent, like massive company, how on earth does that happen? Maybe they were involved.
Yeah.
Right? Don't sue me.
Yeah, I got bearish on Circle after this because they should have froze the assets, but they let the hacker to transfer stablecoins from Solana to Ethereum and then swap the USDC to Ethereum, to ETH token. And they can't freeze ETH because it's a native blockchain asset. They could have, you know, froze the USDC though. So that was a very bad mistake, in my opinion, by Circle.
Yeah, terrible for Circle. It was a #1 stock pick at Cryptonary. I think we need to find another asset. I think this is, if I was Tether right now, I'd be laughing my ass off. Also really doubling down on my security to some degree. Tricky situation. I think you said earlier, diversify across stables, diversify across blockchains, diversify across protocols. Good lesson across the board. I want to discuss how this affects Solana. I saw a post up today, and look, Solana's, like the whole market, is down. I saw that something like 85% of current Solana holders were underwater. This could be false. I just found this stat online. I saw that most DATs were on a loss. You know, they were down. I don't believe that this means everyone's going to cut their losses. If anything, I think people are like, no, I'm not going to cut losses. I'm going to hold my positions. I saw trading volume was down. Talk to me. Solana did nothing wrong here. This was a protocol issue. How does this affect Solana?
I think it's a bad thing for Solana in general because, you know, they lost close to 300 million in TVL, first of all. Second of all, a lot of their users lost their money because of this incompetence of the platform that they had in their ecosystem. It's kind of bad, to be honest, because it shows that Solana, like a Solana DeFi, is still like not really well developed. And they would be like, okay, what to do on Solana? You've got meme coins and pump fund, but they will push towards tokenization and real world assets. Now everyone, TradFi, will be looking at this hack and they will be like, hey, you know, do I want like $300 million of my client's net worth and money to just disappear? So it's not really great. It's bad for the ecosystem, I think. But, you know, Solana is a great tech. It has a history of recovering from such things. You know, FTX, we all remember, community and developers, they could recover. But we need to see whether they can recover.
Yeah, I don't think there's any chance that they don't recover. I lived through when Solana plummeted to $5, the FTX issues, the Luna issues, the Anchor issues, maximum chaos. You know, Sam Bankman going to jail, Do Kwon going to jail, NFTs, everyone calling them a scam and everyone giving up on them. And if there's one thing the Solana chain has, it's one incredible community of, you know, holders and builders. So I think they'll do more than fine. I wouldn't say this really affects the price. I don't know if Solana has underperformed compared to other tokens in this time frame. I see Solana's down 7% on the 24-hour. You know, BNB's down 5%. You know, Ethereum's down 3%. Bitcoin's down 2%. So I think Solana takes it in stride. We just have to see. But definitely an interesting situation we have on our hands. Yeah, bro, I can't help but just keep thinking about centralization risks and protocol risks and the importance of security. I think we need to do a masterclass on operating security just to make sure everyone is tuned up and careful. So yeah, there's a lot of crypto discussion there. We spent a lot of time on macro. I would happily move this conversation across to, let's talk about some shorting, my friend. Let's talk about some shorting. We spoke about AVAX, shorting AVAX. We still believe macro backdrop is awful. Whole market will go down. What is on the shorting table right now? And what are some of your buy levels for some of these alts? Let's not give Bitcoin buy levels away. That's for CPRO. But let's talk about some buy levels for Hype, Solana, and let's talk about what you're going to short the hell out of over the next couple of weeks or months.
Okay, so starting from buy levels, right? So I like to play by ear, to be honest. Anything below 60 grand, I think for BTC is kind of like a good value. What else? For Ethereum, I think it's going all the way to like 1,300, something like that. That would be good value. For Solana, maybe like $30 or $40, maybe $50, depending how bad is it. I like Hype, to be honest. I traded it well, to be honest. So it's down from 43 to like 35. I think it can go all the way to like 25, 26, 27. These are the first levels to kind of consider, you know, buying some bags there. But I would rather enter with CLPs rather than spot at that point.
Absolutely.
Because, you know, you don't really know like where.
But then we have protocol risks. We have protocol risks.
Oh yeah.
Oh, it's one of those. Project a good lesson here. Yeah, absolutely. That's one of those things. It's, you can buy your Hype and store it in a cold wallet and you're good. Or you can be in the CLP and some yield. But as you said, you don't want to chase it. Damn, is that Hype yield appealing and appetizing? But protocol risks, have to be very careful. I have a bunch of Solana on an Orca pool. And even for me, it's made me double and triple check. Well, not double check, but like contemplate if I'm going to keep all of these pools open. I have funds in Camino. Call me crazy. I haven't checked if I can withdraw just yet. I should check after this stream. But yeah, very interesting. And what are we shorting then, Abror? You made me some real money last week when you told me to short AVAX. What else should I be shorting this week on my trading journey? I'm 1-0 right now. So I have 100% hit rates in the world of trading. Thanks to you.
Yeah, I would still keep shorting AVAX, to be honest. I took profits because, you know, the move happened already and it was nice. I think some of our members also took profits. I shared that I entered a position yesterday and now it's down like 5-6% already. I would just keep shorting AVAX, to be honest, when I see like a better levels. But again, profit is profit, and I'm just like, okay, I don't want to like be glued to my screen and watching price action and stuff like that. So I just want to take profit and do some work. You know?
Absolutely.
I would also short, I think, like I'm looking at Algo. Have you heard about Algo?
It was one of the first. It was one of the first tokens we covered at Cryptonary. It was like a pseudo Cryptonary pick. Before Cryptonary picks existed, we covered Algo, and it was something I got stuck in. I was in my yield on Coinbase. But talk to me about Algo. Where are we at right now? I haven't heard that token in at least 2 years. So what's happening there?
Yeah, so it's up roughly 37% from the lows in the last like 2-3 days, because after Google published their quantum thing, it started rallying because, you know, apparently Algo is like quantum resistant and they are like riding this quantum FUD with Algo. But I think it's still holding its levels. I think it still can go up all the way to like 1.3 13 or 14, this is where I would probably look to short, to be honest, because I think it's an absolute ghost town as well, worse than Avalanche. So I'm looking at Algo, and I think the whole this FUD with quantum, again, I read the paper. Again, this is the quantum FUD, like it can happen, it might not happen. It's all theoretical and people just alarming. And on one hand, it's a good thing to be proactive and be prepared and make progress on the front. But on the other hand, it might not happen even like in 10 years or like 20 years. They just showed, the Google paper just showed that, okay, you don't need like 10 million qubits, you just need like 1 million qubits to actually crack Bitcoin. And one of the things is that it was co-authored by the guy who works for Ethereum Foundation.
Okay.
You know, and they were shitting on Bitcoin.
Yeah. Interesting.
So
I think. Go ahead.
So I think I would short Algo because if it's rolling off the back of this quantum thing, I would gladly short it because adoption-wise, fee generation-wise, all the things that generally drive the price action of L1 is like, it's absolutely dead. Yeah, so this is what I'm watching right now.
Yeah, makes sense. Me and you have a very fun story regarding Avalanche. We'll save that for the C Pro members. We're going to jump on with them right now. We have a good story. Regarding the quantum, for me, I quite enjoyed the paper. I think people don't read papers, they read headlines. And I think people completely misinterpreted that piece. And now that you say it's the Ethereum guy, fantastic. But even then, look, I'm sure this is where it's like, look, you're a smart developer or a builder. It doesn't mean you're very sharp outside of that. It's like, you don't think if Bitcoin gets smashed, Ethereum's not going to get smashed even harder. So yeah, very interesting. Into the FUD. Because
I'll give you my take.
I don't understand.
Okay, go ahead. I'll give you my take. Okay, let's say in the worst case scenario, quantum, like, you know, computers capable of breaking Bitcoin arrive by 2029. Let's say that, okay? Let's give it to them. It happens. It's theoretical, but let's say it happens. That's a huge progress for human civilization. That means you can discover like different drugs. You can, you know, maybe reverse aging. You can figure out how to cure cancer because your computational power would be so massive. You could came up with a whole bunch of things, you know. And if it happens, okay, Bitcoin, and if Bitcoin doesn't adopt it and it goes to zero, there will be something else. Okay, you will be able to like short it or get exited or buy something else. Even if you lose money, let's say, the world will be such a good place compared to today. It would be a massive progress done by like human species if they actually reach that level. So okay, that's another way to look at it. You know, in the worst case scenario, you will live in a better world, you know.
Yeah, that's definitely an interesting take on the situation. It's like what they say, it's if a nuclear war breaks out, you're not going to be worried about your S&P holdings. And I guess if Bitcoin gets cracked, there's probably some sort of innovation that has potential to be a positive. I understand everyone's going to be crying about their bags, but I think you've already cracked the anti-aging code. I don't know if people can tell you in your 40s. So very impressive, Brian Johnson.
Yeah.
We're going to jump on with the C Pro community now for a few minutes. Is there anything you want to touch on here on YouTube and X before we head off?
No, that's all on my side. We can just continue with the C Pro community.
Okay, fantastic. Abror, thank you very much. Regular watcher who's not a C Pro member, check out C Pro for our research and analysis. If you're serious, you can check out Inner Circle. If you want to go even more detail, we have a couple of other initiatives. Blockchain advisory, if you're looking to tokenize. And if you want to see what we're building from a Web3 perspective, we have something called C3. So thank you guys. Really appreciate it. Have a lovely weekend. And